Well, welcome back. A new Gallup poll finds 51% of Americans see the U.S. energy situation as fairly serious. That compares to 34% who say it's very serious and 14% who say it's not at all serious. Oil prices this morning continue at elevated levels, even if they are pulling back a fraction right now. The price of Brent is at $83.86, and the price of crude oil is at $79.50, down about 1/3%. Joining me right now is the CEO of Canary, Dan Eberhart. Canary is one of the largest national providers for oil field services needs. Dan, it's great to have you. Thanks very much for being here.
Thanks for having me back, Maria.
How's business going, and what can you tell us about the regulatory stranglehold happening for oil service companies right now?
Well, business is pretty good, but I think, look, I think there's storm clouds on the horizon. I think whenever you see, the Exxon buying Pioneer, that says to me there's going to be less drilling in the oil patch, and they think it's easier to do M&A than to go drilling. I also think, look, we've got a good economy, we've got a high oil price, and yet we're seeing production lower than it was during the Trump administration, lower than it was pre-COVID, and that just shows you that the regulatory environment is very, very stiff right now. I also think if I could talk about the SPR for a minute, I think the Biden administration has really missed the window to replenish the SPR. The train has left the station with the Saudis and OPEC cutting, and the Biden administration missed kind of a golden window when oil was in the 60s and 70s to replenish the SPR.
Well, I think this is a really important point because now we are at the lowest levels in the SPR since the 1980s. And you mentioned Exxon. Yeah. The company has been holding talks reportedly to acquire Pioneer National Resources. If those companies move forward, it would be Exxon's largest deal since merging with Mobil in 1999. But it's also giving Exxon a dominant position in the Permian Basin. Dan, I want to get your take on the implications there. And also, when you see a big deal like that, potentially, doesn't it trigger other deals? The Journal this morning writes, Exxon deal hunt signals possible shale M&A wave. Are you expecting a wave in M&A in the shale business?
Absolutely, I think it does. I think you're going to see Chevron is probably right now scrambling and Conoco are scrambling to figure out what they can buy. And I think it shows, these oil companies coming home, they want to be a part of U.S. shale, the Bakken, the Permian, and beyond. But it also kind of channels T. Boone Pickens. They think it's cheaper and easier to drill for oil on Wall Street than to drill in the oil patch. And, I think that shows warning clouds for consumers ahead, because if they're buying additional production instead of drilling for it, that's going to lead to tighter supply in the future and higher prices for consumers, which will obviously weigh on the economy, right?
Yeah, I mean, look, we had Mike Wirth on, the CEO of Chevron, recently, who talked about the permitting process. And I know the White House has been trying to blame oil companies for the elevated price of oil and gas, and saying that the industry is not doing enough in terms of what's available out there. Mike Wirth said he doesn't know what they're talking about in terms of these 7,000 leases, because the real issue is the permitting process. Can you explain to us about the permitting process?
Yeah, I absolutely agree 200%, Maria. Look, the problem is not the number of leases. It's very easy to get leases. The problem is permits in the Biden administration are running, 45 days longer, and they're about 30 to 40% more expensive than they were during the Trump administration. And the administration keeps throwing wet blankets at the industry here. And you see that the proof is in the pudding. Look, the economy is better, the oil price is higher, and yet the domestic oil production is lower than it was during the Trump administration. That's because of the regulatory morass thrown out by D.C. Biden has slowed down pipelines, has canceled the Keystone Pipeline and others, has canceled the offshore lease program for new drilling sites, and has just made it very, very difficult to drill, and has thrown continue to throw wrenches and sand in the gears for the oil industry. And so our production, our drilling is not what it once was. The rig count is also lower, and this is all just constraining supply, and it's silently sowing the seeds for the next oil price spike, which ultimately will be bad for consumers and bad for the economy.
How long does that cycle take? What are you expecting in terms of the next price spike?
Well, look, I think it seems to me we definitely have a Goldilocks scenario for oil exiting 2023, at $100 a barrel or higher. I think that's inevitable at this point. And I also think the Biden administration seems to, I can't stress enough how missing the window to replace the Strategic Petroleum Reserve is just really bad for our national security and really bad for consumers. I wish the administration has left us completely unprepared. And I think that, there's an oil price spike is inevitable at this point.
Yeah, and they won't admit the impact that this climate change agenda is having. Here's a bit of that interview I referred to with Mike Wirth, CEO of Chevron. Watch.
I don't know anything about this 9,000 lease number. I don't know where it comes from. We don't have anything even approaching a fraction of that. When we get a lease, it just begins a process where we have to acquire a number of permits.
And that's the issue, the permits. Dan, what about your business? Do you have the scale, or do you too perhaps down the road see a company acquisition, a larger company merging with Canary?
Well, I mean, look, I think that's possible, and we're obviously always talking to people, and scale definitely makes things easier. We've done a series of acquisitions, more than a dozen acquisitions in the last 10 years at Canary, and we're always looking to acquire. But I'll tell you, Maria, I think that you continuously need more and more scale to operate in U.S. shale and operate in the U.S. oil field, and I think the market dynamics point to that. But I'll say this: I think that we're a survivor, and I think that we're going to continue to grow out there. But it's definitely hard to operate, and the regulatory burden makes you have to get increasingly bigger to be able to get the same kind of returns on equity and returns on assets in your internal portfolio at a company in the U.S. oil patch.
Okay. And Dan, real quick, just to put a closer on that, you said that the administration missed the window. In other words, what you're saying is they missed the window to buy back oil to improve and lift the numbers in that strategic reserve because prices are going to get away from them. They'll keep going higher. Well,
absolutely. Look, if you go back and Google what they said a year ago, Maria, if your viewers do that, they're going to see the Biden administration said, look, when oil goes below 80, when oil's in the 70s, we're going to replenish in 2023. Oil went, as low as in the 60s. The administration did nothing. And then here you've got OPEC cutting, 1.66 million barrels a day, and oil spiking to 80, or just about 80 this morning, and they haven't done it yet. I think they've completely missed the window, and they were essentially lying when they said during the 2022 midterms they were going to replenish in 2023. They had an excellent opportunity when the price was somewhat low, and they did nothing.
Yeah, well, we're going to keep a spotlight on it. We have already. And, of course, this potential wave of shale deals is also quite interesting. Dan, I hope you'll come back soon. Thanks so much.